Good evening and welcome to the Financial Week. I'm Andrew Laidley. Tourism Minister Edmund Bartlett today disclosed that the sector is still performing well despite the challenges of the COVID-19 pandemic. Mr. Bartlett says although some plans have been derailed, tourism continues to be a big earner for the economy. Tourism is one of the sectors which experienced complete lockdown in mid-March. Hundreds of thousands of workers were sent home with no idea when things might return to normal. But since the sector started to reopen in June, there have been signs that recovery might be quicker than initially imagined.
We're already seeing positive signs that buoyancy is slowly returning to the sector. And we are cautiously optimistic that we will see a 40% increase in arrivals over the winter season when compared to the preceding period of the massive downturn. Currently, we enjoy the highest booking response rate in the region, with more persons booking directly than through travel agents. If we maintain current levels of interest, we are potentially looking at over 1 million visitors by year end.
Some tourism workers have been called back to work, but JHDA President Omar Robinson says it's still not close to normal. Tourism Minister Edmund Bartlett addressed the issue.
Approximately, therefore, 30% of our workers have returned to work in the sector, albeit under conditions of reduced hours and salaries.
Make no mistake, hotels reopening and running at 10 to 30% of occupancy cannot be interpreted as a return of these businesses to profitability. The burn rate of cash during this period is immense and underscores the appeal we have been making for the urgent help for working capital to support the sector.
Although the recovery so far has been slow, Mr. Bartlett noted that investors haven't wavered on fulfilling their commitments.
Investors have also continued to show confidence in the Jamaican market and are finishing projects starting. I can report that 90% of the planned investment for the industry are still on target, despite the effects of COVID-19 pandemic. Yes, our goal to increase hotel rooms to 25,000 by 2023 is still on track.
When the pandemic hit Jamaica in March, the industry owed local banks $56 billion. Most tourism enterprises have been granted a moratorium, but they argue that the sector will need a long-term solution to speed up recovery. Burita has upsized its APO to the maximum $13.5 billion allowed by its prospectus. The investment house went to market aiming to raise $9 billion, but decided to accept more after receiving overwhelming support for the shares. Now at $13.5 billion, the offer has broken several records. It is the largest private sector equity offer ever in Jamaica, as well as the largest straight Jamaican dollar equity offer and the largest APO in Jamaica's history. Deputy Chairman of Burita Investments, Paul Simpson, said the successful execution of the offer is testament to the growing maturity of the Jamaican capital markets and the efforts of the leadership team at Burita. To currency trading now, it ended today with the US dollar selling for $142.75. The Canadian dollar sold for $108.46. The pound sterling closed at $184.60, while the euro is going for $170.07. Stocks ended mostly higher today, helping the JSE index to a 2,600-point gain, but losses suffered in LASCO-affiliated companies weighed down the junior market. The top performers of the day were C&WJ Deferred Shares, Epley Caribbean, Consolidated Bakeries, Blue Power, and Key Insurance. The worst performers were ISP Finance, Cargo Handlers, Kingston Wharves, Trans Jamaican Highway, and Maybury Investments.